Our top story today is BlackBerry, and our next guest has a number of items on his list that does worry him. Max Wolff is the chief economist at Manhattan Venture Partners, and he joins us now live from New York. Max, always good to see you. Thanks for joining us. And let's talk a little bit about this. First of all, of course, with BlackBerry, we had the Passport launch this week, and then today we had the earnings. Earnings, some would say, were maybe mixed, but if anything, John Chen seems to be promising and delivering.
Yeah, so thanks for having me. It's always a distinct pleasure to join you guys. I do think there was more good news than bad here. So even if it was still a loss, a 2-cent loss per share, it was way better, 14 cents better than the expectation. And probably most importantly, we saw the burn rate, how much of their cash, about $3 billion they're using up to stay afloat, come down to pretty close to zero. So the big risk to BlackBerry here was that they would kind of run out of cash before they came up with good ideas that the market agreed with. That looks very unlikely to happen in the foreseeable future, which is hugely positive. Additionally, I think everyone sort of believed and continues to believe that the company's in very good hands here with John Chen. Also, the future of this company is going to be software and services, and those are doing pretty well. So those are all the big pluses, which you note quite accurately. On the negatives, still losing money. Still really going to have to see how this Passport does. We certainly hope it does well, but it's too early to tell. And last but not least, you still saw revenue fall both year over year and quarter over quarter.
Max, how do you look at this company today? I mean, we just went through the quarter. You did. Clearly, there were some positives, no doubt about that. But how do you look at the company in terms of, will it actually turn around? Will it gain market share, any market share back from what it had been? I mean, we had, I think, the revenue numbers are massively different from today from where they were in 2011. How should an investor look at this company?
So I think the good news is that this company looks set to survive in some form. The bad news is it's not exactly clear what that form will be. And maybe the other thing I think that they should be very honest and upfront about, and they're not always super good at messaging this, is the future of BlackBerry is not going to look like the past of BlackBerry. It will not regain most of that market share. It will not be as large of a company, and it will not be doing the same things. So I think BlackBerry's, the security, some of the systems and the patents around the email are excellent, around mobile telephony, also valuable. I think BlackBerry Messenger continues to do really well, but I think the future of this company is less in the handset business, much less in the mobile operating system environment, and much more in software and licensing, which they're beginning to move toward, but that's a different animal altogether than the BlackBerry of the first decade of the 21st century, in which BlackBerry defined, created, and innovated what is now the smartphone business.
But Max, I suppose one of the big questions for this company is, do they have a superior security product? And will that be enough to convince enterprise customers to come back to them?
So they do historically have a superior security product. In fact, other folks who have devices and software packages, which in some cases have more market share, are actually using licensing or kind of copied some of their technology. So I don't think on a technical level there's a lot of debate about the superlative nature of some of the technology sitting inside BlackBerry. On the other hand, if you don't sort of have the stage, and the operating system here is the stage, and you don't have the hardware, and the hardware is also kind of the stage, then even if you have a couple of good actors out there, it's hard to make sure they get cast right, they get the spotlight, and they get the attention, because whoever controls the stage, the hardware, and the operating stage, the mobile operating system, has an awful lot of leverage as against somebody who's providing some security services and messaging services, which is more the future of BlackBerry as far as we see it.
Max, what do you do with the stock? And I ask you that in the sense that, this stock has been range bound. There's a lot of investors out there. I think a lot of our viewers here in Canada who are looking at it, wondering what to do. And I wanted to just give you and just our viewers this number. It's hard to believe, but in 2011, they had $20 billion in annual revenue. This year, it looks to be about $6 billion or so. I mean, there's a massive, massive difference from a company revenue perspective in terms of what's transpired just over the past couple of years. What do you do with the stock? What's it worth?
Well, I mean, I think you make a great point here, but when you lose 70% of your revenue and you really have a little bit of a brush with death, which to some extent the company did, you have to emerge from that deeper, wiser, and you can't go back, right? We can't turn the clock back. So I think we're going to see, unless Passport is hugely successful, a quasi-graceful exit from the hardware business, or just a permanent dedication to a niche. And that niche is going to come under pressure, that enterprise niche, in part because the IBM collaboration with Apple is fairly dangerous. Microsoft is fairly dangerous for that niche. So I think it's really going to be a software and services business, and it can be a great business, but we're probably not going to see them hire back anywhere near the headcount they once had, because I know they have had a dramatic reduction in the total number of employees, and we're not going to see the big market caps, and we're not going to see as high a profile for BlackBerry going forward, but there is a place for it. They can employ people, they can make profits, and it is a great survival story, even if it isn't a great get back to where you were story.
Max, what do you think John Chen is really thinking about the future of this company? Amber Canwar in the past, who often does the interviews with John Chen, has asked him in the past, and the answer seems to be that he's not planning to sell the company. What do you think he's really planning to do?
Right, so those questions get asked him quite often. He's obviously pretty good at dodging them, which is what you have to do for any number of reasons. I think what he's doing, in my mind, is he's trying to do the kind of thing that people say you have to sell the company to do, which is break it up, look at the pieces separately, figure out where you should concentrate on those places, try to execute very well, tamp down the expectations so they're manageable, and keep the organization lean. That's all the things that usually happen when you're acquired or you get an activist shareholder. And if he doesn't want to be forced to sell the company, at least not on his schedule, or get activists in there making life miserable for him and the management, then he has to do all the things they would do anyway. And it looks like that's what he's saying he's doing, and in fairness, that is what he's exactly doing as CEO.
Max, we'll leave it there. Great to see you. Thanks so much for joining us today.
Thank you. It's always a pleasure to join you. Thanks for having me.
Thank you. Good to see you. That was Max Wolff. He is a chief economist at Manhattan Venture Partners, joining us from New York.